Hello bro, and welcome back to the new stock evaluation video. Today we are going to analyze KB Home with the stock ticker KBH, and the reason why we will analyze it is because they will or already have, based on the time you're watching, release an earnings report. Okay, so let's take a look at it, let's analyze it together. As always, we are going to analyze this company using little Canva presentations I prepared right now here. So let's go straight into it, okay? So who I am, my name is Yasha and I'm your best stock advisor, and I will help you make smart decisions on the stock market, okay? This is basically me, the pretty boy, and I additionally also know some secret strategies that will help you outperform SP500. So if you are interested in that, click the first link in the description, okay? So without being said, let's go straight into the analysis, okay? This is very straightforward, simple and beginner-friendly analysis without any bullshit, because I don't want to be your professor at the university who just talks shit and is still broke, okay? So as a complete beginner, what you actually care about, you care about chart, profit, debt, money on the bank account, value and price, okay? So let's go straight into it. So in terms of the chart, we have here a little instruction saying chart has to grow for all 10 years. Now, what does that mean? That means that we will draw a little exponential line right now here on the chart, kind of like this, and the chart basically has to follow that, okay? Now let's take a look and think logically. Does the chart here, the orange line, does it follow the black line? Yeah, it goes a bit down, up, down, and so on and so on, but generally it follows that line. So chart is good to go, okay? Because it grows through all years. It's that simple. Now we come to the profit. And here we have again the little instruction saying profit has to be in plus and it has to grow through the whole years. Now let's make a similar line just like with the chart, kind of exponential line going like this. And now let's analyze the profit, okay? Profit actually means net income, so don't be surprised that here we have different words, okay? Now you can see that in 2014 the profit was massively high, but during the other years the profit was significantly lower, but still kind of growing. You see, like it kind of follows that line. Then in the recent years, it fell down a bit, but generally it follows that exponential line that we draw. So profit is also good to go, okay? Except here 2014, this is shit. Now we come to the debt, and unfortunately this KB Home does not disclose the debt. So I took total liabilities instead, okay? But the instruction for total liabilities is exactly the same as for debt. Basically, total liabilities have to be low, just like the debt. Now, total liabilities are basically all of the costs that company has, and debt is part of total liabilities, okay? Now, what does that mean, that the debt has to be low? It actually means that the debt has to be decreasing through the years. Now, let's take a look at the chart here. So, let's compare the chart with that black line, okay? Now let's take a look at it. It first goes a bit up and then down and then up again and down. But generally, if you compare this point right now here in 2014 with the one in 2013, the one in 2013 is actually lower than the one in 14. So that's a good sign. The debt is decreasing through the years. Of course, it goes a bit up and down, but generally it follows that black line that we draw here, so it actually is decreasing, okay? That's a good sign. Now we come to the money, and with the money, we have to actually consider the money on their bank account. And additionally, they have to have more money than costs. Now, what does that mean? If they have more money than costs, that means that here the money on the bank account is in plus. Now let's take a look at the numbers here. So they basically have $981 million in plus, as I draw right now here. So that actually means that they have more money than costs. So that's a good sign to see, bro. That means they are not broke, they can handle debt, they have money coming in. So that's a good sign, okay? Now we come to the value, and the instruction of the value is that the stock has to be undervalued. Now, how do we decide whether the stock is undervalued or not? For that, we measure two different things, okay? We measure so-called P/E ratio, and we measure intrinsic value. Now, P/E ratio is basically a number that tells you if the stock is undervalued or overvalued based on comparison with competitors, okay? And generally P/E has to be lower than 15. Now the current P/E of KB Home is 9.45, and as you can see it is lower than 15. So that's a good sign, okay? Now I will mark this as a good sign. And intrinsic value has to be higher than the current price. Now what does that mean? Intrinsic value basically tells you a fair value of the price, okay? So based on some calculations in the background, the current price of KB Home should be $91, but the actual current price is actually 68. Now what does that mean? The actual price is actually $23 lower than the price that this company should have at the moment, okay? The current price, so let's mark it as a here, P, the current price is lower than the intrinsic value. So that means that the current price is actually undervalued based on this calculation right now here. So that's an amazing sign, bro, because that means that the company is also based on intrinsic value, or so to say fair price, undervalued, okay? And now we come to the price, and here we have a very simple rule. Price has to be lower than 150 euros so that we can actually consider buying it, okay? Okay, change euros for dollars if you're from America, or change euros for British pounds if you're from Great Britain, you know, I mean from United Kingdom, whatever. So, but basically it has to be lower than 150, okay? And the current price is $68.04, sorry. So the price is also lower than 150. It's that simple. And now let's come to the final evaluation, where we will basically summarize everything that we have analyzed, okay? So let's take a look. Is chart growing? Yes, it is. If you don't believe me, go a few seconds back and watch the video from the beginning again, okay? Is profit growing? Yes, it is. Is debt decreasing? Yes, it is. Do they have money on the bank account? Yes, they do have. Is the value, or let's say the price, is the stock undervalued? Yes, it is. And is the price below 150 euros? Yes, it is. So here we have our final evaluation. Is extremely nice company. So should you buy or should you sell? Technically, bro, you should buy, because the evaluation that we did is amazing, okay? But still, bro, I'm a bit concerned that they don't disclose the debt, because that means that they are probably hiding something. Additional thing is, bro, that their profits were significantly lower compared to the 2014 year. So we have to take a look what will happen in the future, okay? But generally, bro, I think that you should at least put this stock on your watch list. Maybe invest small amounts each month, maybe, I don't know, 20, 30 euros, maybe 60, buy one stock per month, and then let's see what happens, okay? So if you want to know more about stock market evaluation, bro, click subscribe, join me on this journey. I want to become rich by self-improvement and stock market investing, and if you have the same wish, then join me, click subscribe, do the hard work, and see you on top of the world.